Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. With U.S. stocks coming into the close, the Nasdaq-100 is trading sharply higher along with the broader market, posting a strong rebound to start the week, trying to recover from last week's declines given the shocking jobs data and as coronavirus infection rates and reported deaths appear to have eased in some key locations. Joining me today to catch up on market action and review the Nasdaq-100 on the charts is Chris Dearborn. He's the Managing Director on Nasdaq's Markets Intelligence Desk. Chris, great to have you with me as always, and all the major averages up over 5.5% to kick off the week of April 6th.
Absolutely, Jill. Happy Monday. Hope everyone's well. Yeah, the major indices started out the session noticeably higher this morning. Signs that the coronavirus situation could be improving here. All the indexes are up significantly. We opened about 3 to 3.5% higher, and we steadily climbed higher throughout the day. At the current moment, indexes are trading near the session highs, up well over 5.5%.
All right, let's take a look at our first chart of the day here, the Nasdaq-100 on a daily. Clearly plenty of action to talk about on this chart.
Absolutely. So the Nasdaq-100 is 100, as you said before, of the largest companies listed on Nasdaq by market cap that are non-financial. And what you're looking at here is a one-year chart. We kind of zoomed it in a little bit using Fibonacci levels to look at potential support and resistance levels. So Fibonacci retracement levels taking two extremes, a high and a low, 0 to 100. And they put in different measurements to show support, resistance levels, target areas, and often times of stress for stop losses, or if you're short, the cover. They use the 0, 23.6, 38.2, 50 is the mid-mark, 61.8, 76.4, and 100. We're currently, the Nasdaq-100 is trading and trying to break out above that 38.2 level from the low made back in late March. And what you're looking at here is we're trading currently about 79.35. When the chart was made, we were a little bit lower than that. 79.04 is that clear resistance level. If we get a close above 79.04 and can hold it here, then we could have some momentum towards that 50% retracement level. Again, the trading range has been 74.71, 79.100, and a breakout today would signify a change in momentum as well as potentially a new direction for the index and the markets as a whole. If the markets move above that 82.50 level, which is that 50% level, it's not necessarily a Fibonacci level, but more of a confirmation of a trend that could be in place.
All right, Chris, let's move along to our next chart here. And this is a heat map. This is a new one. We haven't taken a look at this in the past. What are you taking a look at here?
So the heat map showing all the members of the Index 100. And what you're looking at here is nearly all of the members are trading higher as you expect on a significantly higher up day today. The larger cap names, as expected by an index that's weighted towards market cap, are moving significantly higher and adding more points to the index. Apple, Microsoft, Amazon, Google, Intel, Facebook, NVIDIA, all are showing at least 10 plus points. And for Apple and Microsoft and Google, those are over 25 to over 40 now for Apple. What you're looking at is leadership, and leadership by the large cap names is going to move this market higher. Again, the smaller cap names, which are not members and representative of this index, are lagging slightly, but the larger cap names, which is what has led us to the all-time highs only a short time ago, a month and a half ago, and that huge historic run up through the bull market, are starting to show leadership here again. And here's the list of the companies that are doing so.
All right, and Chris, let's wrap up here. We are finally going to get out of just macro talk. You know, COVID-19 happened when we sort of had a vacuum of earnings. Now we're going to go back into earnings season. I'm sure it's going to be a welcome respite to talk about something else in addition to simply COVID. We know Q2 is going to be tricky, but even I think that the key here is what the duration will look like as they start to provide, if they can, guidance for Q3 and Q4. What's going to be your focus this earnings season?
Absolutely. So March was really a month driven by fear. People were uncertain of what the spread was going to be, what the potential contagion could be, the global economic slowdown, how long is that going to take place. We're starting to get some economic data points. Unemployment, non-farm payroll for March. We're starting to have an ability to understand where those numbers are going to be taking us and the impact to corporations and also to individuals of that economic slowdown. If you notice on Friday, the non-farm payroll number was significantly negative, and the markets didn't react out of the gate too much to it. The unemployment number on Thursday is confirming information that we already expect to have here. If the non-farm payroll number shows unemployment in the U.S. continue to spike as we expect towards that 10% level, which is what a fair amount of economists are looking for, then expect the markets to react in kind, meaning as long as the data is predicted and confirms, you could have significant impact to the equities here to the upside. Now, for the earnings aspect, now we're going to get single stock corporate names and how the coronavirus is impacting their business lines. Obviously, there's going to be companies that are going to be significantly impacted, such as consumer discretionary names, retail, malls, restaurants, and the like. However, there's going to be clear winners as well. So we need to see what they're going to be talking about, what they're projecting, and if the coronavirus epidemic can be contained over the next quarter or two, then a Q3, Q4 rebound should be something that we would be looking forward to, especially if the consumers here in the U.S., remember U.S. GDP is 2/3 consumer spend, has pent up frustration and looks to spend their way out of it coming into the Q3, Q4 numbers. It could be a robust end of the year.
All right, Chris, as always, thanks so much for joining us. Have a great rest of the day.
You too. Thank you.
All right. And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.